Hey guys, Josiah here at easycaters.com. Today I just wanted to answer a user question regarding the opening range breakout indicator and my relative volume indicator and how you can use those two kind of as a combination. Um, so he said, can you elaborate more on the opening range and how you would enter a trade utilizing relative volume in a chart of, say, Amazon or AMD, for example? How would relative volume indicator help me in the heat of the moment when deciding to enter a trade based on the break of the opening range high or low, or whatever else the case may be? And secondarily, he had said, can I change the alert sounds? And so to answer that first, no, Thinkorswim actually does not allow us to attach custom sounds to alerts. They give us these 4 pre-programmed sounds, and you can turn them on or off. You can switch between them, but you can't upload your own sound files and replace the ones that they have built in. Um, I believe the actual manually created alerts, those can have custom sounds, I believe, but the indicator derived alerts, the indicator driven sounds, those have to be one of the 4 built-in sound types. You can't actually upload and make your own custom ones here. I don't know why that is. Ask Thinkorswim. Go complain to Charles Schwab, but that's the way it's always been, unfortunately. So that's the answer to the second question. Now, the first question was about relative volume and an opening range breakout. So the way that I've done this, currently I'm mostly trading crude oil and Bitcoin, but I have traded a lot of stocks in the past. And the way I trade opening range breaks on stocks is I would actually sort, like if you watched yesterday's video about relative strength, I would actually filter my stock list to find the strongest stocks for the day. The stocks that are outperforming the market over the past X number of days, or since a certain date, or just over the past certain number of bars, whatever. And just try to find some strong stocks that look good on the daily chart. So that's kind of the starting point. I look at the longer term charts and try to find charts that look good for what you're really trying to do is find a trend day. You want a daily bar that expands, that starts at the low and expands and closes near the high. So you're looking for a trend bar. And so you can ask yourself, well, when do these daily trend bars, when do they develop? When do they happen? And so to me, the way that trend bars tend to appear is they tend to follow periods of relative quiet, or uh, a volatility contraction, I guess you would say. So smaller ranges tend to compress for a little while, or just stay the same, and then they expand to larger moves. And so the relative volume per range indicator happens to be really good at finding these quiet periods just before a trend day develops. And so that's why I've always really liked relative volume, and specifically relative volume per range, because it's looking for tight range candles, tight range days that have higher than average volume for that amount of range. And so it's kind of like pent up energy, or like a spring coiling and getting ready to break. And so that's the kind of condition that I look for. I look for a stock that's already in a relative strength kind of posture, something that's already outperforming the market, but then also has something like a relative volume signal that indicates that a potential trend day might develop soon. And so you can see here, you look at a base, you have multiple days of basing that happen. You have a relative volume signal here, kind of a head fake down below, and then a small trend day develops above, back up to the high of the range. Then we have a relative volume signal here up near the highs as it's getting ready to break out of this range. we churn through whatever resistance is here in this bar, and then there's no resistance left, and it just breaks and runs. And so that's the way I look at this. Trend bars tend to happen after the resistance is cleared out, churned through, whatever, and the spring is coiled and the energy is pent up and everything, and then, you know, the opening range can kind of release that energy and let the stock move, the stock price move really quickly or rapidly. So you can see that this is a perfect example here. This is a perfect example here. And let me see if I can, like, this is a pretty good example too. You have a small base, you know, controlled pullback. It ends exactly at a relative volume per range signal, and then a trend day develops on the next day. So, I mean, I don't just say this stuff. You can see it in front of your eyes right now. You know, this is, it's right in front of your eyes, and you don't really need me to tell you that relative volume per range is valuable to track. Perfect little example there. This is the kind that I really like, where we have a recent small pullback. You might have a trend day down, and this is something I actually like to see, followed by a doji or indecision candle that's relative volume per range signal that becomes the context of the reversal the next day, and you have a trend in the opposite direction. So I've looked, you know, I've developed scans for this type of setup that I've used for myself, and so this gives me the daily context to say, hey, you know, so if I'm looking at this on this day, I see the setup that I like, then I can know in advance before tomorrow even starts that a trend day is more likely. We're already in a trend, we're already in relative strength, we have a weak pullback, we have a relative volume signal saying there's pent up energy here, something's resisting this pullback, and there's clear air overhead. As soon as we break over today's high, and bam. So, you know, that's the kind of thing I love to find. And you only need to trade it intraday. You know, you don't need to get this whole multiple day move. You just need to day trade inside this particular type of day. And so relative volume per range is great for finding situations that might lead to a trend day tomorrow. So that's, I just kind of wanted to drive that home. Here's another perfect example right here. Downtrend day, halted by relative volume per range, breaks in the opposite direction with a trend day. So these are little reversals that I really like to find. So you can actually scan for relative volume per range signals on the daily chart and develop a list the night before of all the stocks that have this kind of posture, this kind of little pullback, you know, or a little base. The base is ending with a relative volume per range signal, indicating that there is a higher likelihood that there would be a trend day tomorrow. And so, you know, this is valuable information, guys. I'm giving you something good here. And here's another perfect example right here. This is not as easy because it looks like it's in a downtrend right here, but we're coming down into this support zone, and relative volume per range is saying, you know, it's resisting this fall, break above this high, trend days in the opposite direction. Same thing here. This would have been harder to catch, obviously, because it's probably an earnings gap and so forth, but you know, you could have bought it at the bodies of these candles here as it came above here. And so that's one way to trade that kind of thing. Here's another example here. Down day, indecision, doji, bottoming tail candle with relative volume per range. And it didn't result in an immediate trend day the next day. But if this was on your radar, on your list for the mornings to watch, and you saw in the pre-market that it was opening up above this range here, bam, you know. So I mean, and you might miss it because, you know. But if you have it on your list, and you know this context is here already at the beginning of the day before any trading has happened for the morning, then it's more likely you'll be able to catch that during an opening range trade or that kind of thing. So I just kind of wanted to show you how I find those contexts, and I probably ranted a little bit there, but you know, this is stuff that I love to look at. I really think there's a lot of value here, and so I wanted to kind of emphasize that. So that's the first thing. I look for relative strength, then find these little contexts where the next day is more likely to be a trend bar. I don't really want all these other days in between. I don't want to be involved in all these days in between when you know, the stock is just piddling around, basing, whatever. You know, it moves. Maybe you could find a day trade in there somewhere. There's you know, probably a lot of them, but they're going to be pretty disappointing compared to if you're able to find a trend day. So relative strength, relative volume per range in the prior day, indicating a more likelihood of a trend day the next day. And it might not even be a daily candle. You can also use relative volume per range on a 2-day candle. If you look here, you can switch it to 2 days, and the market's fractal. So sometimes you might not see a signal on a 1-day candle, but you would see it on a 2-day candle. So you can actually scan and filter and sort your lists by any of the 2-day, 3-day, 4-day, 5-day, meaning a week. You can look for weeks that might have a trend week the following week. And so you can know in advance that, hey, this week could be good for this stock. So anyway, that's how I would sort those. And then, so you have your list here. You can sort it by relative strength with the strongest stocks near the top. Over here, I've got all these multiple time frame relative volume per range columns. One set to daily, one set to 2-day, 3-day, 4-day, 5-day, or weekly. And so you can sort the highest relative volume days to the top of your list here. You can see this is highlighted high relative volume for yesterday. This one too. So this automatically gives you those types of days. Not all of them are going to work out, but this is not a certainty type of game. This is a game of probabilities. So you can see a lot of these gapped up, and several of them turned into good trend days. Days where you would at least have a higher probability of catching a good trend and riding it for a little while. So that's what I would do here. So you can see there's another one of my little setups that I like. Downtrend, or a down bar, signal, immediate up bar. And look how beautiful that was right there. I mean, these really do catch bottoms and tops, guys. So you can do the same thing on a 2-day. If I switch this over to a 2-day time frame. And so there was a volume per range signal on the last 2-day bar. Same thing there, and look at that trend day. And this was a trend 2-day bar, by the way, just incidentally. Same thing yesterday. We have a little bit of a trend bar that developed today after kind of head faking below the relative volume candle from yesterday. Same thing on the 3-day charts. You can switch your chart to a 3-day. And you can see that, of course, was a big breakout day, trend day. Or trend 3 days, as it were. But anyway, these help you find those situations where there's pent-up energy, and it may not be the next day, on these longer-term charts, like 3 days or 4 days or 5 days. It may not be the very next day that has the trend day, but it will tell you that situation is developing where a trend day is more likely. So anyway, I just wanted to show you can use the multiple time frames here to sort your list and find situations where, hey, the last weekly bar had a lot of pent-up energy, and so it was more likely to result in a trend week. So you can see that here. A weekly bar that was highlighted right there last week led to this trend bar today, or this week. And that was a high volume week in general, so it's not really tradable, but this is how you can bring the possible trade setups to your watch list and sift through them a bit and find the ones that look right for what you want to do. Okay, so that's the daily, that's like sorting by the daily type of time frame stuff. Once you have a list of candidates that are likely to have a trend day develop on the next day. And let me switch this back to daily and zoom back out here. So at that point, then you can go into, the morning of the next morning. You can zoom into your daily, your intraday charts, and then start evaluating either with the opening range breakout indicator or, and the way that I actually use this is, again, I'm not really looking specifically at at only levels breaking and that kind of thing. What I'm wanting to see is the first candles of the day on multiple time frames. Are they relative volume per range candles? Are they telling me that there's pent up energy that's about to unleash? And so let me see some of these examples here. I think the customer had talked about, it was Amazon, maybe Nvidia. So look at this. I mean, this is a beautiful chart right here. You can see that this is the 30-minute chart, and a lot of people trade using the 30-minute opening range. And so you could buy on the break of the high of the 30-minute candle, but that would leave a lot of leave a lot of money on the table. And it's also not the most ideal timing to buy. Nevertheless, this candle does tell you some of the context for the day, and the relative volume per range signal tells you that there is some pent-up energy here. Somebody's interested in the stock or something like that. This one doesn't really add a lot. This is a 15-minute chart. I don't see a lot being added here other than just confirming that, yes, there is higher than average volume in that candle. And so we drift up, we hit a relative volume per range signal and drift back down. And you can't really see much on this particular time frame, so I would zoom into the next time frame. So this is a 10-minute. You can see the same thing. The opening range candle had a 10-minute candle inside the 15, inside the 30. They were all confirming that there's higher than average volume here. We drifted up. We hit some volume up here and pushed down. Came down. You can see we kind of faked below this low at first, and then came back and retested it. And kind of in the midpoint of that candle wick, put in a relative volume per range signal right there, and that timed perfectly the liftoff. And then these kind of signals came in up at the top. Let's see if the 5-minute added anything to this information here. So you can see the signaling up here that we saw on the 10-minute, pushed it down to the signaling here that was near these lows, and then it took off from there. And a lot of times you'll see this, guys, where a pullback, there's an initial fake out where it tries to take back off at a higher low, create a higher low here, and some people were buying right here expecting it to take off, but there wasn't really any relative volume per range signaling here, so and they couldn't see that, whereas now you can. And so then you can wait for market makers to manipulate that, or whoever, or whatever happens, it stops all those people out, and volume steps in right there. And you can't see it necessarily on the normal volume graph, but you can see it on the volume per range graph. And it takes off from there. And this is a 3-minute. I don't think it's going to add anything extra here. You can see the signaling at the lows here, at the highs here, at the lows here, at the highs here. I mean, it gets muddled in here as a lot of interest comes in, and there's busting through all this resistance up here. But you can see, it marks the highs, marks the lows, and so forth. So hopefully that's clear enough to see. We can go down to a 1-minute if you want, but this is probably not going to really add any clarity to this. So I would prefer to see people, instead of buying the breaks of the range, just use the opening range as kind of the context and for setting targets. a lot of times you'll go to certain multiples of the range, and you'll see that it interacts with those multiples. And so I like to see people not blindly buying the breaks of the range, which I mean they do work, and a lot of people do these types of trades. I just feel like it's kind of inefficient when you have something telling you where the possible bottom of the day actually was. And so what I like to do with these again is to find nested signals. And I've done videos about this in the past, but I'm looking for embedded signals, a volume per range signal for the first bar of the day on the 30, preferably with with one or two 15s embedded inside of it, that one or two of them have relative volume signals. Same thing on the 10, maybe two or three of those are highlighted as well. And then I love to see these fake out moves in the direction that I'm expecting it to not go. So if I see the 30-minute range here, the 30-minute low is taken out just by a wick. And, this is a bullish stock. And we've just had this gap up and so forth, and volume comes in like right here confirming, then, that is what I love to see. And sometimes you'll see it'll just take right off from here. This one was a little different. It pulled back and then took off. It still didn't take out this low this time. It's not always going to win and not always going to hold these lows. But this was one where you could have bought it right here and maybe taken some off here, or just held, pulled back, it challenged you a little bit here, but it still held this low and then eventually took off. So anyway, that's how I look at it. I like to see these nested signals at the opening range. And I love to see nested signals at the open, pull back, do a fake out type of move with a relative volume signal down here if I can get it. And there was one on the 3, and there's probably some on the like 2 or 1. Not as high quality here, but there's probably some signaling there on some time frame. And definitely right here on this final pullback here. So I love that kind of setup because I feel like I have an edge there where I know the stock is bullish. I know it's in a relative strength trend. I know the only reason it takes out lows is usually because the market makers are trying to shake people out. And so those are ideal times sometimes to buy, especially when confirmed by relative volume per range. Okay, so that was Amazon. I can't remember what the other one he mentioned was. Let me see. Amazon or AMD. Let's look at AMD real quick. See if there's anything on that. This one's more of a classic, just a runner. It opens and starts running. And so these, I mean, you really just have to buy almost blindly if you want to catch them sometimes. But you can see here, actually, there's, on the smaller time frames, sometimes you will find indecision candles at the open. So you can see here on the 3 and the 5, there's a little bit of an indecision candle going on here, right there. And so these kind, if there's a good context, if there's relative volume per range showing up, these can be taken on a break sometimes, just a break above the candle, 5-minute bar break, and held for a multiple of the candle's range. So let's see here. Pull up the 1-minute chart. Zoom these out here. You can see this one has kind of topped out at this third multiple up here. It's having trouble getting any interest further up. So we have the opening range here, and half, one full range, another half. So 1.5 ranges above, it kind of started topping out. I'm guessing that this is a 1-minute chart here. But if you looked at this on a tick chart, I would not be surprised. You can kind of see a little bit of highlighting coming in here on the volume per range signaling. And so I'm thinking that there is a signal embedded in this drop right here that would have given you perfect timing for this trend to start. You opened today, pulled back, kind of created this base, with a bottoming tail, came back and tested that bottoming tail, put in relative volume that you can see just starting to come up here. And if you were on a tick chart or something, you could probably see it better. And then it started taking off. So I've already gone on how I use the daily charts and multi-day charts to find volume situations that can lead to good trend days. I use the same thing on intraday charts. And so these pre-qualify your opening ranges as being interesting potentially. So you can see here, here's a first 30-minute candle right here. And we had an inside candle, both of which had relative volume per range signaling. We had a fake break below it, a head fake kind of move with just a wick that moved below. Just kept a basing right at this level here, all these relative volume signals. And it, with all these highlights, it's a little confusing because it's, just highlight one after the other. There's a lot of volume going on here. They're not letting it move. And then finally come to this point right here, and it finally gets a break. And let's see if we can see that on the 1 minute. Down at the lows of the range, has a relative volume signal after it starts. It kind of sucks in some buyers here, stops them all out one last time under these lows and under the opening range, and then puts in a signal right here, and bam, there it goes. So I use these multiple time frame relative volume columns to sort my list after I pre-qualified all these stocks as being potential candidates for a trend day. I would then, on the day of trading, I would sort these lists by relative volume on the opening 30-minute and 15-minute and 10-minute candles, and then I would be looking at only the candles that are showing highlights in the first 30 minutes or 15 minutes or 10 minutes. And so you can see here, these are, basing, bam. These are the kind that allow you to get in. The kind like AMD, they don't really give you much time to do anything. If you're really nimble, you can get in on a bar break at the beginning of the day, but you have to be really committed to it as well. You have to really believe in what you're doing, or else you may not hold on to it and so forth. But these tend to give you a way to get into ranges that are developing at the beginning of the day that are likely going to lead to a trend later in the morning. And so they're a little slower moving and they're easier to catch. Let's see if I can find some other examples here. I'll sort the green ones to the top here. So here's a 30-minute opening range candle. We had a head fake above, back down on the range, and we just stayed in the range here for quite a while, putting in relative volume right here on the 15. Same thing on the 10-minute right here, inside that 15, right there on the 5. This is, you can tell that there's a lot going on here. There's a lot of signaling happening, meaning there's a lot of volume going off in both directions. But let's see if I can find my mouse here. But yeah, in these kind, you usually just want to wait for a fake out move and then buy on a break above relative volume signals. So like right here, we have a low put in, It attempts upward and then stops everybody out right there. And then you can buy on a break above these relative volume candles. So that's the way that I would look at these. Let's see what else we have on the list today. This one, we had a range. We had a high volume range, broke above, held kind of near the highs up here. Churn coming in here, relative volume per range on all these multiple time frames. It found support right here. Based, volume coming in near the end of the base. This is something you see in bases. Volume will tend to come in, relative volume per range will tend to come in to begin the base, and it will also tend to come in just at the end of the base, just before the move develops. So you can see on the 10-minute there, that kind of led to this, and then just started stair-stepping up. And this one, I can't really see much going on. We have relative volume signal on these time frames here, embedded, but it basically bases all day, and then finally gets a break later in the morning or later in the afternoon here. But you know, so this could be bought as a breakout, but it's not really that interesting because the signaling doesn't allow you to get in early in this case because there's not a nice trend going on. Let's see what else. So this one was pretty lethargic today, it looks like. We had volume come in at the beginning of the day, but then it just kind of held, and it pushed above in the middle of the day here, and it's still holding, so it may give another push here into the close. A lot of times you'll see a continuation into the close. Same thing kind of with this one. You got it just basing near the highs here. See on these 15s if there's any good signals here. You got a 30-minute that pulled back down. I love this kind of setup where a 30-minute has kind of an inside 15, and it just kind of coils down into this type of area and then gives a signal at the lows. I think we already looked at that one, but that's the general idea. I love this right here. So this doesn't have a signal in the 30, but it does in the 15. It was initially got a break, but it came back inside the range here, and then it just kind of quieted down until this volume per range signal came in right here, and that was the perfect timing. Buy on a break above there. There's also ways to get in down in this tail of this 30-minute by looking at the 5-minute chart down here. I think we already looked at that one perhaps, but that one was kind of the same idea. You know, you've got these all these nested inside candles, coiling a spring kind of, and then they release. That's the type of setup that I'm looking for with these. A lot of times with these, I would prefer to not see a huge gap or anything like that. I like these smaller gaps, and it's a little more predictable than the larger gaps. I started out in stocks trading gaps specifically, and breakout gaps are great, but I got frustrated because I'm maybe not the fastest when it comes to getting into these gaps that just gap and go or whatever. I like to be slower, I guess, and more methodical and that kind of thing, and not let my emotions get involved. And so I developed this type of system based on wanting to find something that was something to do with the stocks that don't initially surge and just run away from you first thing in the morning. I wanted to find stocks that still trended and created good trends, but that gave you time to get in. And these type of signals give you a way to get in at ideal locations in stocks that have a good context. So again, here we have opening range. This one doesn't have a really strong signal. 15 looks good. And then we had an inside 10 right here, inside a highlighted candle, and it settled down. I love this type of look here, where it has nested candles inside each other, and the last one is a relative volume per range candle. Bam. That's what I love. So you can see that kind of coiling down into this moment right here when it finally lets go. And there's a little bit of an uptick in relative volume per range right there in that tiny little doji, and that set the whole thing in motion. Okay, so I think you guys generally get the idea. I know I've kind of droned on here, but I really love this kind of these kinds of setups. And so this is, I think I've explained pretty much what I'm looking for. I like these nested inside candles that are kind of like building up a pressure, building up, you know, coiling a spring, that kind of thing, showing pent up energy, and especially if they give a fake out move first in the wrong direction. You know, if it fakes out some people, makes them think it's going to go down for a moment right before it reverses, gives a relative volume per range signal, and then goes straight up, something like that. I love those kind of setups, and so that's the type of thing I look for. I like to look for those on candles or on charts that have daily context, you know, like right here. And this was, let's see, this was 221. Let me look at this on an intraday chart. 221 right here. Let's see if I can scroll these back here. Not sure I'm looking at the right day. So right here. Oh, this is today. I'm looking at, I thought this was a daily graph. I'm actually looking at an hourly graph, and we've already looked at this. So this is actually a good example for everyone. The final candle of the day yesterday, actually I'm wrong about that. It's the final two candles of the day. But the hourly candle just before the closing candle gave this nice pullback and relative volume signal that led to this move, a move up into the close, and then a continuation today as the day got underway. So I've also in the past developed columns to look at just the closing candles of yesterday so that I could catch this type of situation going on, because like I said, I like the slower moving, the ones that don't just spike at the open. I like to see situations where I can get involved before everybody else does. And so looking at the closing candle of yesterday is one way that you can do that. You can look for a relative volume per range candle that closed out yesterday, and maybe it was in a daily chart that was a relative volume per range signal, and it closed out the day with a relative volume per range candle on, you know, the 30-minute or the hourly or whatever. And that's a pretty good context for a trend day the next day. So that's a situation where you can kind of get some inside information before everybody else does. You know, I say that air quotes because you know, it's freely available there to everyone. It's just hard to see without something like this. So anyway, and one other note here that on how I use this. I have these columns here that sort by relative strength from the open and relative strength from the close, the prior close. And so these would allow you to bring stocks that are opening strong and closing, or opening strong and trending strong to the top of your list. So relative strength from yesterday's close, relative strength from the close, it's kind of like percent change, but it's telling you in terms of relative strength to the market. So it's saying that relative to the market, it's opening stronger than the market. The close has moved, you know, since yesterday's close, this stock has moved up more than the market has, or down more than the market moved down. So that's relative strength from the close. Relative strength from the open is looking from the open of the day and comparing the movement that's happened since then and saying, how does that compare to the market's movement since the open? And if it's stronger than the market, then it gets a higher score. If it's weaker than the market, it gets a lower score. And so you can sort these stocks and bring the intraday relative strength stocks to the top of your list, not just the daily relative strength stocks, which this list is already composed of stocks that have relative strength on the daily chart. But then we can look for stocks that are performing the best intraday using these kind of columns. And so you can start your day looking through these lists. You can start in the pre-market and say, hey, I want to look at stocks that are looking good already for today's open versus the S&P or whatever. And right after the open, you can look at stocks, how they're performing versus yesterday's close or versus the open. And so that's one way you can bring the not only stocks that have good relative volume for the opening range, but also stocks that maybe just gapped up a tiny bit. And so they have good relative strength from the close where, maybe the market was gapping down a little bit or staying flat. And this stock is gapping up a tiny bit and saying, hey, I'm stronger. And so that can add to your context and give you some confidence that this is a good stock to possibly trade for the day. And the same thing from the open, you can quickly sort and find the best trenders for the day using that one, because that's looking at the change since the open. And if the higher that change since the open is, the more of a trend it might have developed. So anyway, those are two other things that I use. I like the Zenger volume ratio to tell you when volume is high in general. And I, of course, use the normal gap percent and that kind of stuff as well. But anyway, I hope this has been helpful as far as understanding how I use relative volume in the opening range kind of trades. I don't just trade raw opening range breakouts. I look for opening ranges that have relative volume context, and then I look to play in the direction of the relative strength or whatever, and you can use the opening range to give you your targets and so forth. So hopefully that will explain some of that and help users out there that are interested in this type of trading intraday. And the relative volume indicator is available on the website at easycators.com/relvol, RELVOL. Relative strength is available at easycators.com/relstrength. It's actually RELSTR. And so you can check out the website with those two. I'll put links in the description below. And if you guys have any questions, as always, you can send me an email on the site or leave me a comment below. I try to answer all the comments and any questions we get there. And anyway, I hope this helps, and I will talk to you next time.